to the panel discussion. We have a really cutting edge agenda for our discussion today. The agenda, as all of you are aware, is around the themes of artificial intelligence, robotics, blockchain, and Internet of Things. And for discussing this topic, we have got on the panel with me some people that really, in my mind, are really best placed to reflect on the state of affairs on these themes in the industry today and where we are likely to head in the future as well. So thank you very much, gentlemen, for joining me on the panel discussion today. What I would like to do is for the audience, these are terms and buzzwords that we read about, hear about, talk about a lot in the media. The question really is, as practitioners of financial services, as fellow bankers, how many of you believe that artificial intelligence, robotics, blockchain, over the next 3 to 5 years, will fundamentally change the nature of financial services in India? So can I have a show of hand on saying people who believe this will dramatically change, and 5 years out, as we reflect back, banking will look very different from the way it looks today? So, show of hands. Oh, wow, we have a convert audience. So that's a good place to start. And with that, let me actually open up to the panel. And Abhay, if I could invite you to make some opening comments on what do you think about these technologies and what's your personal experience been like?
Okay. There was an ancient Chinese curse which said that may you live in interesting times. So I think we are all living in very interesting times. Something very strange happened on 25th December on a beach in Thailand. And there was a little girl who actually figured it out. And what she saw was the sea was retreating very fast. And she remembered her geography teacher telling her that, when this kind of stuff happens, chances are it's a tsunami. And she was a little kid, and she alerted lots of other people on the beach saying that there's going to be a tidal wave, and she managed to just rescue all of them. And which is my submission. I think we are just seeing a beach in which a lot of water is retreating very fast. And what's going to come as a result of all of this in the next 3 to 5 years is a huge avalanche. Yeah. And let me just start very briefly with all three. I'll briefly touch upon all the three. The first one is blockchain, and I think it is almost a harbinger of the third passing of the web. Yeah. So we had a web 1.0, which was largely brochureware, and all of us in our youth have actually tested it out. We're currently in a web 2.0, which is Gmail and Facebook, and we are able to exchange photos. What's going to happen with 3.0 is it's going to become more transparent, more decentralized, and the single biggest thing that's coming out of it is what is called smart contracts, which means that if conditions are necessary, the contract will get executed. And that has huge implications for what's going to happen on land registry, what's going to happen on banking contracts, what's going to happen on the stock exchange. Huge. Yeah. So blockchain is very big. Yeah. The second one is Internet of Things. Internet of Things, what it does is it suddenly changes industries which used to manufacture things into software companies. Yeah. So therefore, every company on this planet becomes a software company. Yeah. You used to, manufacture steel, and all that you ready to worry about was, did my ERP work in time? Did my email work in time? Did my invoicing happen on time? Now, suddenly, when the steel bars start talking to each other, as to where they are, what are they composed of, which building are they going to be a part of, you have, a Tata Steel or a Chorus suddenly become a software company. Yeah. When the medicine that you're taking in starts telling the doctor that I am actually going to be effective because this person's DNA is adjusted for my delivery, or I'm encountering germs that I did not think that happened before, a doctor actually also has to be a software expert. Yeah. So therefore, that is what Internet of Things does. Yeah. And the last thing, which is artificial intelligence, and it's actually two things. It's artificial intelligence coupled with big data, and the two, have a love affair with each other. What happens is suddenly you start making sense of a whole host of data that's coming in, and that sense results in insights, and from insights you can take very, very calibrated action. So what you took a lifetime to learn, seat of pants, judgments, suddenly becomes available on the fly. Yeah. So what happens is suddenly you experience is at a huge discount. Yeah. So all these three things together, blockchain, Internet of Things, artificial intelligence, big data, actually is building an infrastructure for a very, very different world. Yeah. So the sea is retreating, and there's a massive tsunami that's going to come through.
Thanks a lot. I think that really sets the stage for what capabilities are really available and at our disposal today and what they could do. I want to turn over to Deepak, and the question that I have for you is, given all these capabilities, what's really pushing banks and financial institutions to adopt some of these technologies? What's the business rationale?
So I think the way to look at it is, I'll break it into three simple analogies because we all understand the concept around be it IoT, blockchain, or AI. So I think conceptual level, everyone is equally aware. The way I look at blockchain is, if you break your entire telco experience, blockchain is like your undersea cables, which are transmitting a whole lot of data from one continent to another, one part of the world to another, but you don't see that. So there is a lot that's happening, but it's not visible. Your entire experience of IoT is like those towers and cell sites. Part of it is visible, but part of it you don't know what it's doing in your life. So partially visible, part of it is not visible. And the entire AI experience is more like the mobile phone that you have in your hand. You know what it does to you, but still there are certain technologies and component which is hidden. So when we look at each of those use cases in terms of banking, the way I look at AI is going to get you to interact with a product, a brand, an experience, just like you do with your device. But at the same time, AI is powering a lot of information that you are leaving behind while communicating to a brand or a product, which in turn helps the manufacturers or the banks to know a lot more about you, be it in terms of credit, risk, underwriting, lending, the behavioral part. Blockchain, of course, a lot of it, as I said, is something which may be behind the scene. It's not as much going to be out in open for the end consumer to see, unless you probably are initially in the trade or you're part of those use cases around, say, smart contract and KYCs. And IoT, I think a lot of this IoT is currently getting spoken about at the concept level. How IoT will actually convert into the scalable use case for the bank is something everybody is trying to figure out. So in a nutshell, AI is up and real. I think the benefits around AI, be it in terms of robotic process automation or looking at AI in terms of conversational banking and chatbot, there is a value realization that is already happening for banks. We are seeing the value coming out through AI implementation. While I think blockchain and IoT, I would say, is something we all agree these are great technology, but we are all trying to find viable and scalable use cases around which models can be built.
Sure. I hear you, Deepak. I think the point that AI and robotics are more here and now, and then IoT and blockchain are use cases and applications that we are really trying to think about. In some sense, those are Horizon 1, Horizon 2 kind of technologies is what I hear you saying. Sridhar, you have a unique seat in the sense that you have a global exposure. By being part of Citibank, you know what's happening in different parts of the world on this side. What use cases, applications are you seeing emerge of these technologies?
Yeah, but before I answer that question, I'm really glad that you asked that opening question for two reasons. Yeah. One, just to see the optimism of these technologies and how quickly they will come in. But more importantly, the second part where you said in 3 to 5 years, I think that is very key because I don't think these are going to happen overnight. I don't think these technologies will reach us overnight. And I'll tell you a couple of reasons why. And maybe take that question from you. If you look at, just take blockchain as an example. Blockchain, just to make sure that we're all very clear about the definition, what it really means is that it's a distributed ledger which records every transaction and stores them in a massive global network without it being altered or tampered. So very simply put, this is what it does. Now, in an industry which is as highly regulated as banking, each of those words in that definition raise eyebrows for regulators. You're going to store data, which is third party. You're going to store validate data, which is again third party. You're going to have data transmission, which again needs to be regulated. So the entire ecosystem of regulation needs to change to make sure that a blockchain becomes more commonplace. The second part about blockchain is that it is a network, which means that the more we have, the more members or more participants in that network, the more complex it becomes. And therefore, for these technologies to start coming into play, it needs to start with a very simple use case, right? Where the complexity is a little bit less so that we can evolve regulations, we can evolve ecosystems around it. So just to take an example, say if party A is selling goods to party B. Currently, the mode is that the party A is very keen that he gets the money from party B, and he doesn't want to be exposed to the risk of party B defaulting. And party B, on the other hand, thinks that, look, I need to get the goods from A, and unless I get the goods, or unless I get the assurance of the goods, I'm not going to be parting with the money. So that is the construct that there is. And currently, it is done by letter of credit, and a huge number of documents that go into play. It is cumbersome, time-consuming, it takes a lot of energy and effort, frustrations, and so on and so forth. So in this particular instance, you can see that the network is only two participants. So cases like this, where it's a huge value transaction, participants are only few, lend themselves to blockchain. So I think this is where it'll start to come in areas where it is simple to implement, where both parties understand, and then take it forward. Right? And similarly, you can take, say, for example, lease. Lease could be one. And then slowly it'll evolve. Once people are comfortable with these sort of transactions going onto blockchain, lease could become lease finance. Lease finance could become lending. And then it'll percolate down into the market. So it'll take a bit of time before these things start to hit us. But there is no denying that each of those technologies have some substantial advantages, whether it is on the top line side, in terms of increasing revenue, increasing the number of customers, or you take the bottom line of cutting costs and automating processes, or even the customer angle of customer wow, instant gratification. All those elements, these technologies stick, but the evolution will take a bit of time, and it'll happen through simpler processes which can take these or adapt these technologies to themselves.
Yeah, thanks, Sridhar. Rajesh, over to you, the same question. What are the use cases? And you are seeing more from the supply side, right? You're looking as a technology provider where these technologies are being used. Where do you see a lot of acceptance?
So starting with blockchain, and if you were to generally say that the available technologies like AI and blockchain and IoT, the things that they offer, it's just like having a Lego block, where you can build a car, you can make it an aeroplane, you can also make it a glider, but you need to be wary of the fact that you can't ride that car. And it's important to make sure that you orchestrate processes in such a way that you have a robust platform on the basis of which you build this. So if that robust platform can transform itself into a car and then so on and so forth, it's the right thing to sort of pursue. The second point is that this is the first time I've seen in my 24 years of working with the banking industry, that we've seen the technologies ahead of the banking itself, right? It's the very first time. I remember writing ALPM software and then core banking and then further on multi-channel banking, etc. Each time the bank was ahead and said that, look, this is what we want to offer. Can you put the technology to it? And so the technologists went in the back end and worked out use cases. The second point, the other point is, I've never heard the word use cases used as much now than even when UML was formed. Because everybody in technology talks about, this is the business use case. And the whole thing is, you have such a large technology stack of something that has got huge number of possibilities that you can explore. So coming to the part of adoption, I think some of the core areas that you will see a real adoption of technology in blockchain is going to arrive when regulations take place on the recognition of KYC across the globe. We can't just be happy thinking that we've done a trade finance transaction on a blockchain and it's happened. This has happened because you've just used the blockchain like a ledger. The true purpose of a blockchain is the ability of distributed processing across the channel, across the board, and being able to say that, the same example of trade finance, and that's the true example of blockchain, But is there existing regulations to adopt identity management of non-bankers? Today, the fact is when payment happens, it happens because we are saying that so-and-so bank is endorsing the fact that this is the customer of mine and transferring money to a SWIFT address of whose the other bank is endorsing that that is their customer. But blockchain brings across the possibilities to extend beyond what is called the bank-led KYC. And that is an important part that will probably hold on to the adoption of blockchain in a big way. But I think there will be gradual steps that banks take to adopt blockchain as a ledger. And that's a useful case to have with the fact that it does have the capability to distributed processing. The second part on artificial intelligence, I do think that's where you will find the maximum usage. Artificial intelligence can be used a lot in terms of making the operations more efficient. And those are in the areas of, let's say, moving in logic to say if there are standard operating procedures, SOPs in the bank, can you move this into a repository that says that how you want to align to, let's say, a credit policy of the bank, how you want to align to a customer grievance, how you want to align to a fact of so-called gamification of a transaction that a customer wants to have, be it account opening process or be it a special type of a transaction. A lot of times, banks lose business because the employees may not be trained to handle a unique requirement. A lot of times, banks would lose business on loans because the employee says this is not possible. But I think with artificial intelligence, the ability to sort of delve into the possibilities of, let's say, what is the last part of risk that we can take to make this happen, that should come up. But it's to be done with care. So I think this is one time where you will find a lot of technologists within banks. And that's where you will see a trend. While I am a supplier of technology, I do also see the fact that banks will internalize a lot of technology at this point. The reason being that there are some things they can't trust people outside with. But where do technology players like us come in play? I think, for example, if you look at the clear case of fraud management. Now, we've been in the business of anti-fraud with about 160 banks using our solution. And out of these, extending that into anti-fraud does give us the ability to sort of have a proven ability to determine fraud in particular cases because we have at our disposal the entire data of the bank in terms of transactions, KYC, etc. And then the profiling and then sample profiles on fraud. When you look at the other area in terms of customer acceptance, you can have various points in terms of saying we've done banking on smartphone, we've done banking on this and banking on that. I think eventually it will result to the fact that can the bank have a omni-channel in the back end that can render to any of these devices. So it doesn't matter if somebody brings us a fancy device and say, I can trade for my Lego. That's fine. Your Lego can speak to my banking so-called engine and then I can do API-based banking. So the trend that will catch on is going to be API-based banking with the back end being led with a strong capability model that is led by artificial intelligence. I think operational efficiency is something that will clearly improve with bots, etc., that will come in, where you will have bots for determining how much of a loan can you give to a person and things like that. So the part of sort of discretion that was used by the employees of the bank would probably be something that you can take away when it comes to making sure that the business is done in a sound way. And the artificial intelligence making sure that you can extend the capabilities of that engine to determine what are the policies of the bank that allow you to trade a product. The last